Welcome back to a brand new YouTube video. In today's video, I'm going to be going over the only strategy that you will need to get funded and get your first ever payout. Now this strategy I'm about to show you is the one that I use every single day inside of my trading Discord. I also live stream using this model every single day as well. So if you would like access to that, then make sure you join the Discord, which is in the description below. I also just want to say a massive thank you to everybody that subscribed to the channel recently. I have gone from like 250 subscribers to now 550 at the time of recording this video. We are on the road to 1,000 subscribers and we're getting there very quickly. But yeah, without further ado, let's get straight on with this video and I'm going to teach you the strategy that I use every single day. So jumping into the charts, I trade NASDAQ and I only ever trade NASDAQ. This will work on any forex pair or any futures pair. Mainly I trade NASDAQ, but if you trade gold or whatever else, this strategy will work, so you haven't got to worry about that. Now, there's 3 steps to this strategy and they're extremely simple. It's one of the easiest models out there, and I teach this to my students and they find it incredibly easy to learn as well. So the first thing you're going to be doing is just identifying a liquidity sweep. Probably the most simple concept of any strategy. I think every single strategy has got a liquidity sweep in. The reason we have to have a liquidity sweep is because if we haven't had one already, then the chances are you're going to be part of the liquidity sweep, which means you're going to get stopped. So once we've had the liquidity sweep, the second thing we look for is a clear and obvious fair value gap, okay? And what that means is once we see a liquidity sweep, we just want to see a clear and obvious gap that's been left behind in that liquidity sweeping leg. Now once we've got those 2 things, the third and final step is displacement back through, okay? Now what that would look like is big candles with serious momentum behind them going straight back through that fair value gap. So if you haven't already figured out, we are going to be using the inversion fair value gap model. That is the one that I trade, that is the one that I teach. And if you've seen any more of my videos on my channel, you'll know that is what every single video is about. So we're going to be using IFVGs. And this is simply the 3-step criteria you're going to need. So jumping into this first trade, I'm going to show you now. We did actually take this on live stream. You can see that we just dropped down from New York Open. So New York Open opened up here. We had a little pump and then we just dropped about 150 points to the downside. Okay. Now in this scenario, once the move has already happened, we're going to be looking for reversals. Once price has already dropped 150 to 200 points, the chance of you getting a good short position is very little. Okay, because the move has already happened. So once I see a big drop like this, my only intentions are longs. And that's because I want to try and catch the move that goes all the way back up. Now, going back to the criteria, the first thing we need to see is a liquidity sweep. So here you can see we've just taken out this low to the left. So this would be our first liquidity sweep in this downward move, okay? And the second thing is a clear and obvious fair value gap. And you can see that we did actually leave behind a nice 1-minute bearish fair value gap there, okay? Now, if this inversed, which would look something like this, okay, if price action inverts this fair value gap, we would enter a long position and target the highs, okay? But you'll see as I play through, we do not actually inverse this gap and we just keep pushing down. So in this scenario, once price action keeps pushing down, all you simply do is use the most recent fair value gap that was formed. So if we're not going to reverse from this point, okay, the next sell side liquidity is either this low or also this low here, okay? So you simply just wait until price action does actually inverse a gap. And you'll see we do actually come back down and sweep out more sell side liquidity to the left. Okay, so here is another liquidity sweep. And again, you go back to your criteria. Have we left behind a clear and obvious fair value gap? And the answer is yes. Okay, we've left behind another 1-minute bearish fair value gap. So all we need now is displacement back through. Okay, and if we get that, we can enter a trade. And you'll see we don't get that, we actually push down a bit further and we do take out this level of sell side now. So now that we've taken out all levels of sell side liquidity, okay, this is now where again we look for a clear and obvious gap. We've got one here on the 1-minute. If we go over to the 2-minute, we have also got a 2-minute, okay, so we'll use that one. This one is the higher time frame, so you're going to be using the highest time frame fair value gap. And the reason we do that is because a 1-minute candle could close above this gap, but the 2-minute candle hasn't actually closed above this fair value gap. Hopefully you understand what I mean there. So during the next 2-minute candle, we could actually come up, but then still reject, okay? So that's why you've got to use the highest time frame fair value gap that there is, and that is really important. So The first thing, liquidity sweep, we have got that. The second thing, clear and obvious fair value gap, we have got that. Now all we need is a displacement back through this bearish fair value gap to enter a long position. And you'll see that is exactly what happens. So we come up with displacement and we actually inverse this bearish fair value gap with serious displacements, okay? You can see how fast the reversal happened there. We didn't even close below this liquidity sweep, we just wicked it, and then we just shot straight back up and inversed this gap. So this is now, when you see the signature in price, you enter a long position, you target the opposing side of liquidity, and your stop loss goes a candle close back below. So you can see this is just over a 2.5 risk to reward, and when I play through, you see we come up and we take out our TP, okay? Now, that is the simplest trading strategy you will possibly find on the internet right now. Okay, I'm going to show you a couple more trade examples just so you know it's not a one-off. But that is all you're looking for, okay? Liquidity sweep, clear and obvious gap, and displacement back through it. And 70 to 80% of the time, this will win. It is an extremely high win rate strategy. So, jumping into the second trade example, this is going to look the exact same as the previous one that I've just shown you. So you can see that we're on Nasdaq again. We are slightly bullish, okay, on the recent time frame, but overall we're looking very, very choppy, okay? So this we'll go into with no real bias because price action is just moving sideways. We're in a range, okay? So this is where I would mark out any areas of liquidity that I would like to be swept, okay? So this high is a perfect swing high. We've got a nice internal low here, and then to the left we have got a big external low down here. Okay, so realistically these three are the only levels that I would want to be swept, and then I would look for a move. We've also got, I suppose, this internal buy side as well. Okay, so now you've marked out your areas of liquidity in an unbiased market. This is where you can just wait and see if one of those setups presents itself. So we're going to be looking for the 3-step criteria once again. So the first thing we need to see is a liquidity sweep. You'll see price is just shopping at the minute in between this buy side and sell side level. So simply we just wait for one of these to get taken, okay? So you can see we've just taken sell side liquidity, and all we're waiting for is some kind of bearish gap, okay? So we actually took out buy side and sell side, and then we got a big manipulation down, okay? So we've also taken out all of this sell side, and we've also taken a couple of these wicks over here. So now that we've got a clear and obvious liquidity sweep, which this big candle is, obviously the second step is marking out a clear and obvious gap, okay? And here you can see we have just left another 1 minute bearish fair value gap. Now this stands out on the screen, it's clear and obvious, there's nothing else around that looks anything like this fair value gap. There is not a single fair value gap this size anywhere else, okay? So that is what I define as clear and obvious. If we go to the 2 minutes, you'll see we do not have any other fair value gaps on any other time frame. So this is perfect, it's just a 1 minute. So now the third step is obviously we wait for a displacement. So we can mark out our sweep. So we swept sell side, we've also swept a couple of these lows to the left, and we can mark out our targets. So our first target is this large wick there, and then the external buy side up here is going to be our full TP. Now of course, in this scenario we do not know if this is going to inverse. All we do is simply wait to see if price action comes up and inverses. Okay, if we reject, then simply we do what we did on the previous example and we just wait for another clear and obvious gap. So let's say we do reject this bearish fair value gap, we will just use a different one that gets formed down here, okay? There will be another fair value gap that gets formed if we reject this one, okay? But in this scenario, we do actually come up and break this one. So all we got to do now is just wait for displacement to come up and break this fair value gap, which will look something like this, okay? Now you can see we have had a huge candle there that has inversed a singular 1 minute gap. This is now where you enter your long position. Your stop loss goes a candle close back below, and you can simply target the external buy side. Now, admittedly, this trade is not a very good risk to reward. It's still over a 1-to-1, so it's fine. But of course, it's not like a 2 or 3 risk to reward, but it does still hit full take profit. And it's just another example of this strategy working. And this was all from last week. Okay, so this is not like price action from months ago. This was all last week at the time of recording this video. So again, we've inversed with displacements, we've got our liquidity sweep, and the clear and obvious gap has been broken. So now you enter a long position and you target the opposing side of liquidity. And when we play through, you see we come up and take out our full TP, okay? And that is the second trade example using that simple 3-step criteria. I use this every single day on live stream, and I teach it to all of my students inside of my Discord. If you do like the way that I teach, then make sure you join the Discord, and I am offering a free trial right now. all you've got to do is join the Discord and join the free trial. But yeah, that's going to be it for today's video. Thank you very much for watching once again. I really do appreciate the support that you showed me recently. If I just ask you to like the video, subscribe to my channel once again, and drop a comment if you made it this far into the video. And I will catch you all in the next video. Thanks for watching, man.